My name is Natalie Gallagher, and I am Principal Economist and Director of Economic Research here at Boards. We live in a very interconnected global economy, and so what happens in the US often ripples through other countries, and the EU is absolutely one of those blocks that is going to feel some effect from what's happening in the US. So on the economic webinar series that I've been doing, we've been talking a lot about the trajectory of the US economy. So it's very likely that we're about to see quite a bit of stagflationary pressure, which is sort of marked by re-accelerating inflation, tariff-induced price pressures really flowing through, sort of a weakened consumer coming through in more modest real GDP growth, below trend GDP growth, and then a weakening labor market. As we come to an environment where we have quite a bit of trade uncertainty, we have tariff conversations going back and forth. Right now, at the time of recording, the EU is sort of being threatened with 50% tariffs from the US. Of course, that means that exports will continue to be more expensive in an environment which is already quite suboptimal for EU trade relations with the US, which is of course a major trading partner. So as we come into a situation where exports are more expensive to other consumers, we also have to come to terms with the fact that the three main exports from the EU to the US are also very likely to be impacted given this environment. So the top three exports are pharmaceuticals, machinery, and transportation equipment. In line with this, if we just focus on 2 and 3 to get started, those are two areas of the industrial base that are very reliant on the business cycle. So as we talk about them being major exports from the EU to the US, and the US sort of coming into this downward trend of the business cycle, that becomes problematic when we think of sustained demand, which is particularly impactful to countries that are quite at the core of the industrial base, such as Germany and the EU. Now, on the other side, the pharmaceutical exports to the US are sort of at risk in a different area. So it's not so much tied to the economic trajectory of the US, because of course, if we just had to speak at a very high level, pharmaceuticals are probably one of those areas that are quite recession-proof. But at the same time, we have President Trump signing executive orders that really seek to reshore production of pharmaceuticals back to the US. And so that is going to put some downward pressure on demand from other countries such as the EU. So a really fair question out of this is, why do we care, right, that exports are more expensive and that this can put downward pressure on EU exports to the US? Well, first of all, the EU is a major trading partner with the US, so it means that any sort of ripple effects will be quite profound. Secondly, when we see these sort of headwinds to these major exports, the impact is usually reduced output, reduced investment, and the risk of job losses really stemming from both of those factors. And so this really puts countries that are specifically really geared towards this output especially at risk. And even when we take a step back and don't just talk about these three major exports, we talk about the luxury retail and services space. So think more so on the goods side, luxury goods, maybe Italy and France, and on the services, maybe Greece and Spain. The US consumer is a major consumer of these goods. And so as the US consumer becomes under strain, which we absolutely see coming as we sort of get that re-accelerated inflation, that puts us in a situation where many different categories, many different economic factors are really at risk in Europe as we sort of make our way through the year. Now, I know that this was quite a lot of information, and a lot of it was also quite dour, but hopefully it helps you as a business or as an entity as you're making your way through a very uncertain and volatile period with trade talks and global economic uncertainty at large. Now, many of these forecasts as well as analysis is ready to go, actually in Board Signals and Board Foresight, which are two different product categories at your disposal should you want to combine economic signals with your internal planning. With that, I just want to say it was a pleasure to be here with you today, and I look forward to speaking with you again soon.